Happy March. This is going to be a very quick update. I don't plan on getting into any trades at the moment. What you're looking at right now is FAS, okay? In the last video, I said that I predicted this thing to get up to 67 at least. Looks like we're looking at possibly 70 right now. So we're at 66.29 at the moment. The RSI calculator is getting up there, but it's not a complete sale yet. So remember, a definite sale is at 80, and right now we're at 71. Okay, just want to show you right now, as you can see here, right at 70, we've been bumping up against that for about the past month, and we haven't quite broken past that yet. I'm not going to initiate anything at all. Let's take a quick look at FAZ. What I expect this thing to do is just to keep grinding higher. So FAZ, you see we're down to 896. I was really looking forward to FAZ breaking below $9 before I purchased anything. Right now we're in at about $10.35. So my game plan is just to watch this thing continually drag lower and lower before I initiate any position. So right now you see the RSI is at 30, which literally mirrors FAS, because the ultimate buy price is right at 20 on the RSI. And so right now we're at 30, and looks like we've been bumping up against that and actually trending a little bit lower over the past month. So until this thing gets sub 20, then I do not plan on initiating any positions whatsoever. What you're looking at is a 3-month chart, okay? And so if we back this thing up a bit further, we'll be able to see the lowest point on this thing, which was back here. And I want to look at this just for fun. It's not gonna let me. It's not gonna let me see it. There we go. All right, there you go. Lowest point was $8.88. That was back on September 20th of 2018. What I like to do now is just take a quick look at where FAS was back on September of 2018. Let's see. Oh, there we go. All right, so do I have my date? Where's my date? Is my date at the bottom? Let's see. Yeah, I think my date is at the bottom. Let me just a little smaller. There you go. Yeah, September 20th, 18 put us at 77.50, and so you see kind of where we are right now. And again, like I say, it's just been straight up over the past really 3 months, just been straight up, just grinding higher and higher. And so I don't see that stopping anytime soon. We're already past the previous high of 64, and then the 65 before that. So our next stop is 70 or higher, 77 being the absolute top over the last 4 or 5 months. So what I like to take a quick look at is our economic calendar, because this is really influencing my decision. As you can see, there is absolutely nothing significant going on up until March 25th of this year. So wholesale trade, manufacturing outlook, those things don't usually move the market much, and I don't expect those numbers to be off at all. The only thing that we will even pay any sort of attention to is the residential construction and just the housing market in general, right? From the ground, I'll tell you that here in Texas, I'm running into a lot of people that's either buying homes or looking to buy homes. So I don't see that stopping anytime soon. The new residential construction has come down. We've seen that already in the lumber companies. Weyerhaeuser is one of them. Some of that has to do with the tariffs on Canadian lumber. But overall, here in the United States and also Japan too, we're seeing lumber coming down some, and that's just because people aren't buying more of it than before, and that's because new construction is coming down, right? So we know that we're at the top of our economic swing, right, where we're starting to see little pieces fall off, but we still have a long way to go before anything significant happens. All right, this is the Federal Reserve, because of course, always interested in that. The big issue right now is interest rates. With the market running as hot as it is, the question becomes, what do we do with interest rates? And so they've been increasing those interest rates steadily. As long as the Federal Reserve keeps saying those good things about the economy, we're not going to really see any significant change in anything, I don't believe. So March 20th is the next meeting. Looks like they will have a press conference, so that's when they actually get out in front of the cameras and talk about the economy a little bit. I don't expect them to say anything bad at all. And as far as the economy doing well and then raising interest rates, I don't expect that to change either. There isn't any rhetoric from any politicians or anything about interest rates, so I don't think they're going to have an issue saying whatever they want to say about interest rates going up. The next thing looks like, yeah, I mean, not even April. Yeah, they have another meeting in April, but that's not going to be a press conference, so that's not. So I don't see anything changing over the next month or so. We have a beige book on the 17th of April. That's a full month away. So man, it has been a long, hard slog. It's been an arduous journey with this last position in FAZ. But I'm holding on, not going anywhere. I talked before about only trading a quarter of your cash position at a time. So far, I have 50% of my cash position in trade, so I still have 50% remaining to purchase more shares at lower prices. So right now, I just want to show you again how this works. I know I've illustrated this before, but I want to do this for both my benefit and yours. So right now we're at 1035, and without opening up my account, because I really don't remember what the cash position is, to be honest with you. I think it's something around there, I think. Right now, if I were to purchase shares at this price, I get 585 of them, which is significantly higher than what I paid before. So let's see here. If we do, let's get another calculator going here, because I am curious now. If I do that, got about 4 times 2, multiply by 10.35. Oh no, it's not multiply. 4, 2, divided by 10.35. So I have about 1,000 shares now, right? And so if I added the 585 to that, I have 1,600 shares, and I would have spent roughly 15,000. So if we do 15,000 divided by 15.99, that'll put my price right about $9.84, which isn't horrible. Traditionally, historically, anything below 10 is not a bad price for this particular ETF. We can kind of look back, over the years, and you'll see it doesn't stay under 10 very long. You can come back here and look at these prices. It doesn't stay below 10 very long. So at some point we will break 10. It will happen. Nothing goes up forever, right? And that's just with loading the third magazine. I still have another quarter left to throw at this thing. So right now I'm just gonna wait, watch this thing drop. But I am paying more attention to it now than I have been over the last couple weeks, because I want to make sure that I'm able to get in at a decent price. I would hate to see this thing shoot up before I'm able to buy more. So anyway, that's March update. Hopefully I'll be back, before April 18th with another update when I actually initiate a position. If not, I'll see you then.